Hope everyone's doing well. I'm going to review the price action of this past week for the Emini. Okay, so here was Monday. And first thing you always have to look at, or the most obvious, is gap down below the past 3 days. And you could look back all the way over here and see that we've been in a bull trend or something. But really what's most important, you really don't need this many bars. I could do this, and I could do that, and I could say, okay, what do I know about this day right here? Okay, we're gapping down. Now, it's obviously better if you have more, and since for the practical purposes, most of the time, I'll have a matrix right here, chart right here, and just do this. Really doesn't matter. At the end of the day, what I'm going to do is, here's the low of 17th, and for this, here's the low of the 17th. I'll go ahead and plot it because it's gap down. And we're breaking below it. So bar one, always in short on the gap, but I'd rather see consecutive bars. The most likely thing is we're going to rally close to the moving average. This is, it's bearish, but it doesn't look like below average price action. Here's the moving average. So we're probably going to have to get closer to it. Also, we're breaking below the bottom of yesterday's low. More than likely, we're going to have to test it. Just think about it. If you buy the low, you buy down here, and there's the midpoint. So if I bought the low of the prior day, hypothetically, and I bought more lower, then it'll probably, in theory, break-even bulls can get out. What that really means is, kind of this. Okay, here's a bull bar, and I'll talk about it in a second. If I bought above the bull bar, hypothetically, a trader bought here and added on lower. Maybe they used a wide stop, a measured move down to here, reasonable. So the odds are it's a probably 80+% chance that we're going to get to this line, which would be break even. So hypothetically, if I bought here, added on, break even's here. So if I buy above this, put my stop down here, probably a pretty high probability that we're going to get to here before we make a new low. But that's kind of just a little tidbit of information. Not really the purpose of these videos. These videos are more of always in trading. However, I will try and apply things when I see it, little bits, pieces. But anyways, so odds are you're going to go sideways to up to the moving average, probably close the gap here. So first, always in traders to buy above bar one, stop below here. Weak follow through. So what does that mean? Well, that is a sign that you have bulls are scalping. They bought more higher. The bears want to double top with this low and this low, second entry short, but a bull bar. Okay, so I'm going to try to be quick. I don't know if I'm not going to have time to review every day. Something came up, but anyways, I'll try to do the best. I'll do what I can for the next 20 minutes or so, and then I'll do another video in the morning. But anyways, buy above. You can get out below. I would not. It's a swing trade. If you're a scalper, I would just exit. If I was buying this for a scalp and I missed it, I would exit. But since it's a swing trade, stops down here, you're betting on an early low of the day, but you may get a very deep pullback. You had sell the close, traders sell more higher, so expect that. And look what happened. If I did get out at the close of this bar, I'd buy again above this bar. Reason being, sell the close, disappointed. Bears, disappointed by this, but betting on at least a trading range. And they're trying to get out break even. They failed to do so. Disappointed bulls and bears. Disappointed bears. If you don't understand that concept, managing losses, look at the managing losses videos, look at entering late in a trend, and you'll see more of that. Okay, so second entry buy. If you do buy, probably stop below. Decent follow through bar, but 3 pushes up and probably surprise. Target's a little above, probably going a little bit higher. No reason to short below, so always in. You buy above, stop below, still long. High one buy, but pretty tight channel, so you can sell it, but pretty tight channel, kind of dangerous. You may get a bull breakout. I wouldn't sell. I would only be long. So, and here this is an example. Al talked about this on Friday. Someone asked a question about hypothetically, where's your stop placement for limit orders? Now I said, well, the problem is if I bought this low and I'm looking to buy with limit order and scale in, if I see this bar, I'm going to get out. Otherwise, the stop's all the way, maybe it's down here. Well, it's the same thing on Monday, where if you sell this bar or this bar and then you get this bar, probably better to just go ahead and get out. Otherwise, you need to stop maybe all the way up there. And it's a wedge, 1, 2, 3. So it's a wedge top, may get 2 legs up. So still always in long, probably exhaustion, top of a trading range. First reversal down will probably fail, probably buyers below. Consecutive bull bars. So it's okay to get out of shorts, disappointed bulls. I wouldn't go short yet. I still think we're going to go sideways into a trading range and find buyers. Not yet, clearly always in short. And so bears selling, disappointed, will scale in, scalp out, outside down. So what happened here? Well, if I was a bull, I would get out of shorts below this bar. We tested the high close. Bulls got out, break even, and turned down. So, and by the way, what I've actually decided, I'm going to, I want to spend more time on the days rather than go quicker. So I want to cover this full day, and then I'd rather cover each day one day per video. That way I can give more information rather than speed along. So buy the close bulls, disappointed, buying more lower, getting out break even. Since they got out of break even, traders are willing to buy up here, they're selling. So I'd probably get out of shorts below. It's a major trend reversal. It's a double top. You may test the open of the day, but rather tight channel. Low probability short, tail below, so not a great short. Okay. Consecutive bear bars really doesn't change my opinion. I think maybe a surprise and you may get a third push down, but we already have a third push down. 1, 2, and 3. Probably going to be 1, 2, and 3. So this is not enough. Close to 50%. Some bears selling the close, scaling in, so they may buy back their shorts down here. And we're alternating. We're getting bear bars and bull bars. So, this is probably an okay buy. If you buy above it, probably need to stop down here. Tight channel, first reversal up may fail. And, well, that's what happened. So what happened here? Scalpers bought, disappointed, scalped out. New low of the day, they bought again. So it's 3 pushes, 1, 2, 3. We got a bear breakout below a wedge. However, 50% pullback. Sell the signal bars of bull body. Probably going to find buyers. Decent stop entry buy. You can make the argument you can put the stop below here. That's probably okay, but probably forming a trading range. But making an endless pullback. Okay, so okay, not a great entry bar, but it's okay. Here, you can make the argument that if you're buying, what's your goal? If you're buying it for a swing, all the way up to here, going for twice your risk, you can hold below. If you bought this for a scalp, you get out below, and you can see what happens. So rather deep pullback, second entry buy. If you did get out, maybe you get long again, stop below here. Consecutive bull bars, probably back to always in long. I don't think we ever went always in short. Testing the highs. I'd definitely get out of shorts below that bar for the simple fact that we're in a trading range. So we've had a few legs up, maybe 3 pushes, 1, 2, 3. I'd get out. Too much risk of a double top, measured move down to a new low of the day. Decent entry bar, probably always in short. Are we all, well, we're trying to become always in short. We're probably not yet. We probably need another big bear bar. Small bar, disappointment. However, 3 consecutive bear bars, first reversal up may fail. So not really great. Buy above. It looks like the bulls gave up, and if the bulls are giving up, they may hold for a few legs down. So, theoretically, always in bears, they sell below. Bulls get out, aggressive bears sell. They sell below this bar. They get out of, maybe some bears get out above, but they never had the chance to. So we're still in the short. The bears really need consecutive bear bars down here to get the measure moved down. And, while they are getting bear bars, the bodies are getting smaller, so disappointment. Tight channel, first reversal up may fail. And now we have a bull bar closing on its high. Probably okay for, if I was a bear, I'd get out of shorts above. Aggressive bulls may buy, but, trading range. So probably disappointed again up here. Starting to get a lot of bull bars, but nothing all that special. And, again, Tight channel, probably forming a tight trading range here, but probably will try and form a double bottom. But not really great swing trading. So, and there you go. So, big bear bar. So what happened here? Well, it's number one, it's trading range. So if you're buying here, bears definitely get out of shorts here. It is second interest short. Bulls, if they buy, maybe they put their stop down here, but you're buying in the middle of the range. Probably, where do bears get out? I don't know. I don't think it's all that great of a buy, but if they did, they probably should get stopped out right here. No reason to buy all the way over here. Big bear bar, low in the range. Probably surprise strong enough for a second leg down, so not a lot of buyers above. We have a second leg, but we have a weak buy signal. No reason to buy yet. New low of the day. Big bull bar, kind of a surprise. So probably a small second leg up, but really tight channel. So first reversal may be minor. And there's your second leg up. Are we always in long? I don't know. Probably another surprise bar, and we'll probably go a little bit higher, but not that great. Probably going to form a trading range. So, what do always in traders do? Always in bears, definitely get out above this bar. No reason to short, no reason to short, no reason to sell out, no reason to really sell out of shorts there. Although it is late in the actually it's late in the day, so I get out of shorts below bear bar. And that's the rest of the day. So lots of limit order trading. Not great always in through here because lots of overlap, overlap over here. Sellers selling above bars, scaling in higher, selling above, scaling in. Bears even selling up here. No consecutive strong bull bars, no consecutive strong bear bars, no consecutive strong bear bars over here. And we did get, we tried to get some sort of double top measure move down, didn't quite get it. So not really a great swing trading day. It's opposite. Anything that's reasonable, traders sell, and they buy this low, scaling, make money. They buy this low over here, scaling, make money. Thanks for watching.